When the markets are volatile, it is good to opt for a fund that helps balance out risk and return. The advantages of Axis Equity Hybrid Fund can be explained with the balance of equity and fixed income. Equity provides the opportunity to capture growth and potential for higher returns. Fixed income adds more stability to the portfolio by being less volatile and gives regular income generation. Both equity and fixed income together give you better risk-adjusted returns, thereby potential of higher returns with relatively lesser risk. To understand the risk-return quotient of the index as compared to a pure equity and pure debt portfolio allocation, we did a study, the Nifty 50 portfolio for equity and the CRISIL Bond Fund Index for the debt portion since April 2002. And what we found out is that the equity portion is able to generate an annual return of 16.5% with a risk of 18.5%. At the same time, when we include the bond portfolio with an allocation of 70% equity and 30% debt, we are able to generate an annualized return of 14.2% with a risk only of 13%. This is how we would explain in the next 4 points. The first point is lower correlation among asset classes. When equity and debt don't move in the same direction, the risk quotient is lower. The second point is periodic rebalancing. This lowers the overall risk and optimizes returns, making it cost and tax efficient for investors and lowers overall risk. The third is reasonable downside protection. This aims to limit the impact of potential losses from market downturns. And finally, the benefit of active management. Through research by fund managers to actively allocate assets, this is how we are able to generate better returns. An investor who is looking for a balance between returns and risks, that is, investment solution for those who want growth but without taking much risk.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.